Okay? We're good to go, Abby. Hello? Is it set? Yes. Good. Good morning, everyone. For those of us here physically, and those of us online. Those of us online, can you hear me?
Good morning, sir.
Good. So we're about to kick off this and conclude this particular topic today. Just to remind us, the topic is leverage. When we say leverage, like I said the last time, in a simple language, leverage simply means a firm that has support financially. When a company has support financially, we say the company is levered. Leverage there is a noun. So when a company is levered, or there is leverage in their operation, it means there is financial support. Not from his family, but from the public, especially a public liability company. You can either get this money from fixed capital or fixed costs assets, or other sources of finance or fund or raising fund. You can get money from debt, which is debenture. You can get money from equity, which is ordinary shares. You can get money from preference shares, which pays a fixed dividend. So when you get support of any source, which is money, to finance the operation of your business, we say that is what? Leverage. And there are three types of leverage. Three. One is operating, for those of us who are now around, operating leverage. Two, financial leverage. Three, combined or total leverage. There are three: operating leverage, financial leverage, combined or total leverage. When we say operating leverage, we are simply saying the use of fixed cost asset, just the use of fixed cost assets in the operation of a firm. We say that's operating what? Leverage. And this operating leverage, we can calculate so many things in it. We can calculate break-even point in units, break-even point in naira. Remember, when we say there is break-even, it means that the organization has made a revenue that can be equal to the total cost, or the revenue minus the total cost must be zero. That means the profit, earnings before interest and tax, is zero. When your profit is what? Zero. You say one has break what? Even. And when you break even, if there's any fall in sales, that will be minus, have it? And that will be dangerous. And the organization will be risky. When you look at two or more organizations, break-even point for company A, break-even point for company B, break-even point for company what? C. When you look at the three, you will now look at which one is higher and which one is what? Lower. The lowest break-even point in cash is the one that has the lowest risk. I gave you a question online, Abi, which I'm going to solve. We have firm A, firm B, firm C, firm D, Abi, and we're looking for the lowest break-even cash and lowest risky firm. So when your break-even is low, break-even in naira is the lowest. That means the company has the lowest risk. The one that is higher, the highest what? Risk. Another one is calculating the degree, the extent of operating leverage. we have formula. And that's all we have to remember, that earnings before interest and tax, which is also known as profits before interest and what? Tax. They mean the same thing. Our E is earnings. Our B is profit. And your knowledge of financial account is important here. You must know there is what? Sales, which is revenue. And that occurs in the trading account. There is variable cost. There is variable cost, which also occurs in profit and loss account. Also, it is still a trading because you have contribution. The minus fixed cost, which is our expenses found in profit and loss account. When we do 1, 2, 3, is what? Earnings before interest and what? Tax. Because here, there's no interest, like interest on debenture. There's no tax on the organization. And we agree that this sales, which is the total sales, minus variable cost, minus F's. And the other one, it is earnings after tax, earnings after tax, or profit after tax. It means it's going to be TS minus this, minus this, minus R, minus TP all over 1 minus T. What does that mean? This is still our total sales, our variable cost, our fixed cost. This rate, that's interest. That is the I. That is the interest on debenture, interest on debt. And this one, this preference dividend. That means from that preference shares, dividend is paid. Are you following? And this is T for tax. If the tax is 30% or 40%, it will be 1 minus the tax. And all this will now give us profit after tax, or earnings after tax. So that means we can have this, we can have this. Interest rate, I. Interest rate on debenture. R for rate, interest rate on debenture, or fixed interest rates.
Hello, sir.
Total sales.
Hello.
Yes, I can hear you.
Yeah, please, on the formula for earning after tax.
Yes.
Can you run through it again? Because I can't see the last digits or the things.
Okay, the last one is DP, preference dividend, preference shares. Preference shares dividend. Can you see it now? DP.
I can see them, but can you just run through the abbreviations again? Let me understand them.
Total sales, TS, minus variable cost, minus fixed cost, minus rate. This rate is from debenture. If the interest rate on debenture is 10%. Yes, when I say 10% of the debenture, which is the loan capital or whatsoever, minus preference shares dividend. You know, preference shares dividend are fixed. Preference shareholders are fixed owners of dividend. But unlike ordinary shares, they are the owners of the company. Sometimes they go without dividend. Am I clear? Because the law says if there is no profit, an ordinary shareholder will not go with anything. It is illegal. In short, one could be jailed. The directors of the company can be jailed if the company did not make any profit and they are paying dividend to ordinary shareholders. It's not acceptable because where did you get the money you are paying? That simply means you are distributing the capital of the company, which means you want to kill the company. That means you want the employment rate to increase. You want the economy to be bad. You even want those in government to be more. Right? Like we are seeing here, where the interest rate in 2015 is quite different. For instance, the unemployment rate in 2015, from the analysis, is 9 point something %, and now it's 33.5%. It's NBSO, Nigerian Bureau of Statistics. That is from them, it's not me. I follow it. So you can see that there's nothing. It should just be going. So, total sales, variable cost, fixed cost, rate, and that. 5 years. These shareholders are not ordinary shareholders. Remember, this is ordinary. This is preference. There's a preference to them. So, according to the law, not the law, say preference shareholders has fixed dividend. Whether they will be paid first. No. Whether they make profit, if you don't make profit, you move it. You pay them. It's not like saying an organization says if they make profit, they will pay salary. It's not like they are owing you, but that we did not make profit. All the airport you have been paid, they go. So you'll be paid. They can owe you. With time, they will settle. The same thing with preference shareholders. The only thing they can tend to go is ordinary number minus T, alphabet T, tax.
Okay, tax, okay.
Yeah. So we are good to go again.
Yeah, thank you.
Good. Now, this one, I have defined this, but we'll still go further. We have defined this. This one is financial leverage. Financial leverage is the use of debts, long-term loan, or what some people call non-current liability. But in this case, long-term or debt, like the bank, bonds, and so on, using it to finance the operation of an organization. We say it's financial leverage. In the examination, they do tell you to define. You can tell you to define financial leverage in some of these past questions. They tell you to do that, and you do it. But remember, just to throw more light, the only authentic information you should not play with is your course outline. I hope you're following. Your course outline. Past questions, they are not something you can say is fixed. No. Some will come, some may not come. But the only thing that is very authentic is your course outline. And that's the one I believe was given to you by University of Lagos. Am I correct? Other ones, you source them yourself. But you must understand that course outline properly and then use it to solve some questions. Because it's not proper that all you are doing is just to solve past questions. So, not knowing the course outline to link to the past questions you are solving. So that I don't get to exam and you see another thing that you did not reach. Are you following? I could remember many years ago when they were doing a course called QA, quantitative analysis. They were practicing old past questions. Right? And the person that managed to teach that course is Olowe. Olowe had to go and teach the QA. I was doing a lot of differentiation, integration, and was doing solving on the day of exam. He said what he taught, which is mathematical. And those who went to rely on, because it depends on who is taking, who took it last year or 3 years' time or whatever, but the current thing you need to concentrate is course outline, trash it, and then touch past question. So because some of you, I don't know whether you are cramming the answers. I don't know. How will solve the cram? Solve the cram. Please, that's what you are doing. Please try and understand. And some of these courses will continue second semester, which means a continuation of your knowledge. So please stop cramming, understand it. That's what we do here. And we have to tell you so that you don't tell us you did not know. To be wise, you need to take advice. So we're moving on. Financial level, we'll talk about that. Is the use of debt in the operation of what? An organization. As well. Combined, it's just these times, it's operating leverage times financial leverage. We talk about combined. That is join the two. So that was all we did last time. We're going to move on to solve more questions and throw more light on what we ought to do. There's a question on our platform The first question, I gave two questions. The first, second, then we can now ask question. Before we add one more, I believe we are good to go for this topic. Those of us online, can we move ahead?
Yes, we can.
Yes,
So
you can.
I hope you have the question on your platform. The correct assignment, two of them. Maybe we'll repost again. Let me see whether I can see it again.
Please kindly repost.
Don't worry, we don't repost them. You'll see them. Have you seen it now? Have you seen the question?
Yes, sir.
I've reposted it to. Okay.
Please, can we all see the board? Please, can we all see the board?
Yes, we can.
Yes, we can see it now.
From my end, yes.
Fem A, Fem B,
Your
Fem
banner
C.
is taking too long. Your banner is taking too long to block. Is blocking the board.
Can you see the board?
Yes, please.
What are you saying? Okay. According to the question, given the following, this first one is based on operating leverage, which center more on break even. Let's see what it does. The question says, given the following price and cost data for 4 firms, which of them has the lowest break even, cash break even point? And that cash break even point is in Naira, right? That's the break even point in Naira. As well as the lowest risk, which means the one that has the lowest cash is also the one that is the lowest risk. Assuming 5,000 Naira of each firm's fixed cost are depreciation. First of all, let's establish this. We all agree that depreciation is a fixed cost. Accepted? Is it accepted? It's a fixed cost. Okay? When we calculate depreciation, it doesn't change. We use straight line method or reduce it, but this one is straight line method. It's assumed to be straight line method. Because in straight line method, the depreciation for year 1, year 2, year 3, will it change? Does it change? It's when you use the reasoning balance method or some of the years digits that we'll talk about that. But in finance, most cases like using straight line method, which means the depreciation for that year is the same throughout the lifespan of that asset. So because the amount is the same and it does not change or vary, even when the level of production changes. I mean, so that's why it's fixed cost. So any amount that does not vary, that does not change, as the level of production or output changes, is called what? Fixed cost. They're all a constant. Right? So depreciation is fixed cost. Any question? Are you sure? Good. And the person said that depreciation is already inside the fixed cost. We don't need to do any subtraction. 5,000 is not important to us. What's important is that fixed cost has been given. So ignore the 5,000 because it's already inside the fixed cost. Some of us were subtracting it, I don't know why. But no wala, because they have seen it, that we don't need to subtract. So firm A has selling price. Firm A has variable cost. That same firm A has fixed cost. So our consign now, I don't know whether Let's see whether we can get the maybe tabular, maybe. Right, it will be faster. Let's see whether we can get it tabular form. Something like this. I hope this is clear a bit. B, break-even point. We're all clear with that. Break-even point. So the first one we want to look at is at units, break-even point at units. They are all aware. Okay, let me do this, so that our formula. No, so they can understand. Okay. At units, our formula is FC all over S minus V. As for this one. This one is at Naira, which is cash. This FC over S minus V times X. Is settled. Good. From what? From A. Good. Let's see. From A. From B. From C. From D. I hope this is better, so that we can be seeing it in a table, in a tabular form. In case we have forgotten, FC is physical salary. Our X, ordinary X, is selling price per unit. Our B is a variable cost per unit. I hope that's taken care of. We all know this. Good. Firm A. Firm A has a selling price of 20. Variable cost of 12. Fixed cost of 35,000. Our formula, 35,000 all over 20 minus 12. Somebody help us. 35,000 divided by 8, Abby. 35,000 divided by 8. Our formula. Set? 4,000. 4375. Remember, is what? Units. Look at this very well. This one is still the same thing as 35,000, just for emphasis, times 20. So in a simple language, this one here, Abby, is this, Abby? Multiply by 20, what do you have? 500. Like this, Abby. Is this settled? We have done from A. What I need to A is what I'll do to B, Abby.
That's not clear, sir. That's not clear.
It's not clear?
Yes, sir.
Those are more reasons why we.
But which one is clear?
I got the first one. Is the break-even point at Naira cash?
Are you seeing the board?
Yes, I can see the board.
Because I thought you are not seeing the board. So that second one is still the same thing as 35,000 over 20 minus 12.
Minus 12, yes, sir.
One.
4375
Yes, sir.
times 20.
Oh, okay. So we have already gotten it at the first one. So we are
We have
supposed
gotten the
to
first time.
put
Don't want them to
4,375.
Is it clear now? Good. So second one, I may not do that, but let's just see how it works. So the next one is firm B. 27,000 all over selling price is 15 minus 8. -8, 15. That's 7, I mean. So 27,000 divided by 7. What do you have? 3,000. 5%.
857.
Like this.
857, yeah.
Okay. So that's units. The next one will be 3,857 times what? 15. So what do you have? 57,857. Good. The next one, firm C. Firm C, 12 minus 5. 30,000. That will be 30,000. Yes. Yes. Was that point? How you tell me? Do one? Okay, approximately. Yeah, we have exactly approximately. It's up to 5. So this the last one called any point again. That's all. Okay, because if it's just it's not up to 5, we will not. But if it's up to 5, we'll add to the number before. 30,000 all over 12 minus 5. So what do we have? That's also 7, I think. 30,000 divided by 7. 4,286, I mean. Approximately, I mean.
Yeah.
Good. As units. What is it? You say it's 4, 8. Okay, it's 4,286. 4,286, not 7. Okay. Good. The next one is 4,286 times 12. What do you have? 5,1.
432. 432.
432.
Yes, sir.
That's the money? Yes. Go ahead. Okay. Yes. Yes. Please close. No, it's still this 20. 20. This 50. We still the same. 12. This unit. That's unit, yes. This one. You know, here is our unit, I mean. I just repeated this so that you may see the same thing. So times 15 will give us the naira. That's what we did here also. Okay, good. Now, the last one, from what? From D. From D. 32,000, right? This 32,000. 32,000. All over, was it 18 minus 9. That's divided by 9. So what do you have?
3,555.
Somebody say 5. I don't know.
5.5.
Okay, is it correct?
It's
Like this?
5.5.
Oh, it's 5.5.
Yes.
But there's 0.5 now. You approximate to the nearest whole number. Is it clear?
Okay, sir. Yes, sir.
Nearest whole number. So that's you don't want to accommodate this. 556. That's the unit. And 18. Naira.
64008. 64008.
8. Good. Now, which one is the lowest? FMC.
51
So,
FMC.
FMC. So it's very clear. FMC has the lowest
Break even.
EP what naira or cash and has
The lowest rate.
Risks. That means it's not advisable to invest in Prep A because it has high risks. We cannot invest in this one too. The risk is also higher after A. This one, okay, this one, D. After A, this risk is higher, the next in rank. Then this one, this is the lowest. So that's another way to find out whether it's good to invest in an organization using break-even point analysis. Is that okay? We did not neglect it. It's already inside. You want to remove it. It's already inside the fixed cost. I hope the grammar is clear, Nabi.
Okay, I think the depreciation
is inside.
To the fixed cost.
So they say you can't remove it. Assuming you can say that depreciation was not included, that is when I'll go and add depreciation to the fixed cost because it's part of fixed cost. Then I will now work. But they say it's a way of not even confusing, checking those when they take part. Okay. The process is that assuming 5,000 of each firm's fixed costs are depreciation. It's already inside. So we don't need to go there. They don't want to tell us the portion of depreciation. That means since Monday, what would be the pattern? There are two. The second one. Go ahead. Kitchen.
Check in the kitchen. Good. So that's the end of question 1. That's what the girl says. Lowest break-even unit. But we must do Naira to know which one is risky. Without the Naira, we will know. Because it is money we now know whether it's fine. Without money involved, we can't know. Really, it's not because anybody can increase price. You can add more money and sell. But it's what we know what to have, cash, the revenue, not judge. Whether you're making it or you go soon make a and so I think it wasn't recognized. Who added it? Because depreciation is fixed cost. And assuming depreciation was not part of our fixed cost, or if we add it now because depreciation is fixed cost. No, there's no much. Look at this now. This is 35,000. It would have been 30,000. It would have been 9,000 before when depreciation was not there. Now, what I will just do is 30 plus 5 to get me that 5. So that the fixed cost, total fixed cost will be complete. Is it clear? It's as easy as that. Ask question. No. The topic is ending today. This we have to won't kill ourselves for leverage.
Hello, sir.
Last time. Or
Somebody is asking question.
Also.
Hello, sir.
Yes, I can hear you.
Yeah, please, just for me to know.
Oh, yeah, now.
Whenever we are giving a question like this on leverage,
okay.
So we are supposed to calculate break-even point at unit and at cash.
Yes.
Just as you did in the table.
Yes. No, we did that because the question insists on Naira, which is the cash. If the question did not insist on Naira, we wouldn't have done unit and multiply. If you just say unit alone, we'll stop at unit.
Okay. You can watch TV. So since the question is stated in Naira, we have to do for units and for cash.
We must do unit because without unit, you can't know Naira.
Sorry?
Is it clear?
That thing. The questions on the Oluwakemi, please help us and mute your mic. Oluwakemi.
Are you here?
I'm still asking a question, sir.
Oh, yeah, go ahead now.
I'm saying since the question is stated in Naira, we'll have to calculate it at unit first before doing.
Because without unit, you can't get Naira.
All right, thank you, sir.
You're welcome. Can we clean the board? No, sir. Okay, copy. Let's see. Well, any questions? When you see break even in Naira now, and you are asked to find break even in unit, is there anybody that can solve it here? Anybody? Thank God. The spirit is the same. I'm saying, I want to say, I'm moving.
Hello, sir.
Yes?
Alpha.
Hello.
I can hear you.
Yeah, sorry, good morning. Olufemi here. I'm trying to, I just went through the question again. I can't see where it is stated in the question that it should be calculated in Naira. So how did you come to this conclusion, please?
You didn't see where it was stated that
it is in Naira. The break-even point should be calculated in Naira.
Did you read the question at all?
Yeah, sure, I did. I have it open.
Did you see cash?
Given the following and cost it off. Hold on a second. Given
please read
cash break-even point. Okay. Then secondly, so if you are to find, so it is the break-even point in Naira that is used in calculating risk, right?
We also use calculating risk. We'll do that. We also use the degree of operating to also know. But for now,
This is all we're giving to calculate.
Okay, so meaning we cannot use the units, the break-even point in units in calculating the risk. It is the
unit
naira.
cannot tell us money.
Okay.
Tell us monetary value.
All right, thank you very much.
Okay. Okay. That was the. Can we move the second question? Let me see the post so that those who don't have it. For those of us online, those of us here, the second question is already in the platform. You will see in 810 weekly assessment. That's the next question. It says Premium Publishers PLC, manufacturer of hard care products, produces and markets 200,000 bottles of a hair shampoo annually. Remember, 200 bottles. That is units a day. That is quantity a day. Gone. For each bottle produced, it incurs a variable operating cost of 190 naira. Remember, I said a variable operating cost. That means variable cost per unit of a bottle is 190 and sells it at 300 naira. That means selling price per unit is 300 naira. I hope you are following. It's in the group. Check the group. Okay, don't have the platform. No, I'm just going to have it. I said I've sent it to the platform. Are you on the platform? Are you there? Jericho, I just sent it now. Just a few minutes ago. Francis, we have not started anyway. That means in this question, okay? It means that our quantity is 200,000. Selling price per unit, 300,000. Variable cost per unit, 190. I hope that one is no more a problem for what we are even doing on the board and previously. Fixed operating costs. We saw that some few minutes ago on the board, and it's still on the board. Fixed operating costs, 280,000. The Fed has current interest charge. Current interest charge. That is capital R in our formula. Capital R in our formula. Depends on you have already said current interest charge of 60,000 naira on its long-term debt. They have done that calculation and tell us everything. Sometimes they will say 5%, 600,000 long-term debenture. Are you following? You are the ones who say 10% of. But this one they have calculated, and you are told. And we pay a preference share dividend. You can see, preference share dividend, they have calculated everything and tell us, because sometimes preference share dividend goes with percentage. They may say 3% preference shares of 2.4 million shares. I mean, so you are the one to know that 3% of 2 point will give us the preference dividend. So in this case, it was given tax. It's also given at the rate of 30%. You know, this tax issue will occur in DML, degree of financial leverage. Has nothing to do with degree of operating level. Because it calculates the Fed's operating break-even point in units and a money value. We all know what they are saying by now. Can I clear the board? Everybody? Those of us online, can I clear? So this is question 2 for today. In that question 2, we can take our time to state. Fixed costs, how much? Somebody? 280,000. You must see where the thing is in your question so that you will understand very well. The quantity, which is Q is quantity. What is it?
200,000.
When you can state all this, even just stating all this in exam is also math. For you to read the question and identify that alone is also math. Selling price per unit is 300 naira. Variable cost per unit is 190. I mean, is it correct? Good. I don't think there is much thing again. When we'll come to R, we'll talk about R, we'll come to tax, we know tax, dividends already given. But let's first of all answer the question. Question 2A. 2A says we should find break-even point in units. Remember our formula? Break-even points in units. It hasn't changed. It's still fixed costs all over S minus V. Our fixed cost is 280,000. Our selling 300, 190. Somebody press calculator for us. 280,000 all over 210. I mean. No, 110. 110. 2. Are you sure it's 2? Okay, 254. 45. 254. Okay, 2545. Like this. Huh? Just 2,000. Okay. I want to check this thing. Okay. No. I don't say they sorry, but I don't know what they wrote again. So, but it says 2,540. Good. Okay, they say it's correct. By the witness of two or more persons. The matter is established. Is there point something? Oh, that one is not to 5. Maybe it's 0.45. The first 5 is what you consider, not the second one. So we'll leave it there. That is the answer for that first one. Break even in what is it called? A unit. The next one is in money value. Money value. Okay, let's call this one Roman figure 1. This is Roman figure 2. Break even point in money value. According to the question. Money value will be the units, Abby. As usual. Times selling price, which is 300, Abby. Results. 763,500, Abby. That is just the answer. Because we have done the first one, this one looks as if we are playing, Abby. I like that. We're all happy. Any questions with question A? Those of us online, any questions?
It's flowing.
It's okay, Abby.
Yes.
Now moving. Okay, sorry. This is Roman figure 1. I call this A. And this one is what? See? I will. Let me see. That is if we will accommodate what we want to do. Okay. Let's see how many can do. The Roman figure 2 talks about degree of what? Degree of operating leverage. Okay? Degree of operating leverage. We all agree on DOL? Very good. That is quantity over S minus V. This one is the same thing as contribution. Total sales minus variable cost is contribution, and which this can be written as this. Is that okay? This is contribution margin or per unit.
So there should be a differentiation.
There is.
Because you say what you say.
This S minus V, this one, is something with this now. This S minus V is either called contribution per unit or contribution margin. You will see another question I will show you that has that kind of situation. You don't need stress in examination to get that. This is repeated. That's all. Have you seen the formula? Which means the denominator is earnings before interest and tax. Am I correct? The denominator is earnings before interest and tax. I showed you some few minutes ago. The denominator is earnings before interest and tax. You are not to. I still try to put it somewhere here. Earnings before interest and tax is Q into X minus B minus this, which is the same thing as T, BC. So these two are the same. Because the total sales means Q times X. Q times X, expansion, right? And Q times B is this. And this one is here. It's just a simple expansion. And what you see on the board is very simple. First, our quantity is 200,000. This is 300 naira, 190, all over 200. And this is 3 minus 190. This should be 280,000, yes. That's all. It's just to do what they call substitution. Yes, substitution. That's what we're talking about. Okay, those of us online, I hope you are following.
Yes.
So somebody help us multiply 110 times 200,000. 110 times 200,000. Says 2 million. 22 million. Okay. So now 22 million minus 280,000. You know, here is 22 million. Right? 21,720. Like this, Abby. Good. Somebody press calculator for us. 1.0. Is it 1? Wait. Is it 1.01? The other one is 3, Abby. No, no. So that is a great. Is that okay?
Yes.
I don't know. Did the person say we should comment anywhere?
Yes.
There's comment, Abby.
Explain this.
Yes, we will explain that. That okay.
Now what about the financial?
Okay, there's an explanation, Abby. Okay, let's explain this. This one says we explain. That 1.01 times. What does it mean to us? Somebody?
Over 100 times. If the sales increases by
101%.
That means that earnings before interest and tax will increase by 101%. Is that okay? Remember, assuming, let's write it, assuming 100% increase in what? Sales.
there will be a 101% increase in earnings before interest and tax, or just write profit. I mean, you write profit. So that means the same thing also when it goes down, also, I mean, if our sales also goes down, there will also be that same percentage of going down in net profit. So it's vice versa. That is for DOL, degree of operating leverage.
So, are you saying that your DOL is, for instance, say, 1 time, your explanation can be that, assuming a 100% increase?
Yes, to use that 100, multiply that 50. I use this 100 to multiply this. Yes, we just go anyhow, but don't use that percentage that says increase. Use it to multiply the number of times you have it. That will give you the interpretation. So that's the significance of DOL. But when the person mentions significance, that is significance. It tells you whether you are taking your own down or taking it on whichever method. Whether it's 100% or 200%, 300%. Don't use the other, still multiply that. 100 is better because we have to. Anything can use 200%, 500%, 1000%. It's less than same thing now. You say it's 90%. Use the 90 and multiply 0.9 times what is on the board. Or whatever I give you, right percent. Doesn't matter. Just like it's easier for somebody to say 100, so that you multiply and 0. Why would that be negative? Is it possible? Except, yes, it's possible. People can borrow and spend. Anything can come. If all these things are more. But that would be when there's break even that has minus, have it? The company is not doing well. It's possible, it can have minus. But when it has minus, you know that the company is risky. Very risky. Investment unaccepted. Don't even try it. Because it could cause serious harm. And the finance or the shareholders' wealth will be affected. Okay? Those of us online, any question? Any questions?
Hello, sir.
Sir?
Hello, sir.
I can hear you.
I want to understand this your formula very well. Sorry for taking you back.
Which one you don't understand, though?
On the left-hand side of the board, you see the Tx minus V is equal to Q in bracket S minus V.
Yes, now. Total sales. For you to get sales, there must be quantity. Is it clear?
Very clear.
So quantity times X will give us total sales, which is TS. Is it clear?
Okay.
For you to find total variable cost, there must be quantity times the variable cost per unit. Abi?
Yes.
That's what I just did. And that's why I say that TS minus VC is the same thing as Q, which is quantity common to both, will come out multiplied by the contribution per unit, S minus V. Is it clear? Okay. That was Roman figure 1, Roman figure 2. We can go to Roman figure 3. Am I correct? Can we? That's the copy. And that's the Roman figure 3. Okay, still on 2. Okay, that makes it interesting. Okay, 3 is a combined. Oh, good. Now. So can I move? Oh, you're still copying? Okay, take your time. Take your time. What matters is that when you see the question, it was set, those past questions with two similar things were said. All it does need to do is keep on practicing. And if I've seen more than 2 questions there or 3, the last question given to you. So just practice. And your textbook is also there. Read. I can't be the one reading for you. My own is to explain the thing to you. still need to go home and open book. If you don't open book, all the thing I'm doing doesn't work. But what we are doing now is that we have done it. We have done it. But you need to answer that question yourself. I have done it. I have read it. I have sung it. All that kind of thing will manifest. You must participate. Exam is not something you say someone should help you. You don't help the exam. You must read it. So that you can master it. So that you not be cramming. We need you to understand properly. And it's possible. Good. My head is not big, not too small. I can accommodate. And the brain is the same. The new order brain is the same. No, it's the same. No go to that answer. Brain, those who teach biology, they label big man brain different. Poor man brain different. It's the same. The only thing that differs is level of development. But brain is the same. So develop yours, and your life will never remain. So just, how do you develop? You read. Ask questions. Read. Ask questions. Because you can't ask questions when you don't read. It's when you read, challenges will arise, you ask, they put you through, you move. That's how to do it. So Roman figure 3 can go. Oh, someone even solved it already. Okay. So Roman figure 3 still on the information that we have. I'm not saying much. Still on Roman figure 3. This one is degree of financial leverage. DFL, degree. Degree there means extent of financial leverage in that organization. So what you'll see how I'm doing it so that you don't forget. When you know this formula, you are very close. Yes. Into S. Contribution. Yes, you are correct. This is it. Yes. This times this is TS. This times this is this, which is still contribution. So you know, point is common to both. We factorize. Okay. Yes, we can do it the other way. Like we have written that before. That means we can write like this. We can write like this. It's still the same thing. Because there are times in some question, they will tell you that the total sales is this. The issue of pointing is not right. They may even tell that variable cost is 30% of sales. I hope you follow it. In that case, the issue of quantity was not right. But we can still get quantity ourselves somehow using break-even stuff. But for now, if it's like that, you just apply. You must know the two. You must know the two because the question, you may think they will come this way and they go this side. So you must master the two. You must sit down and do it over and over. Yes, now, yes. You can use it if there was TS in the question. If there is total sales. But if there is quantity, you have to refer to this. So you must understand the two. Those are the two methods. What they are trying to play here is just simple arrangement. It's not even mathematics. It's not maths. It's arrangement. Very with maths, I think we'll get more challenging. No, so make it
Yes, they can give profit, yes. They can just give you earnings before interest, and you know denominators earning. You will see there. And that's what I said at the beginning. I wrote EBIT. Is this? So sometimes the person may talk about interest. Just give you 20 million. So the whole of all this is covered. And they gave you contribution. The whole of all this is covered. Because up is contribution. So that means in the simple language, here is what? All over what? It's still the same formula. That's another one. It's still the same thing. Numerator is contribution. Denominator is earnings before interest and tax. So anyone they like. So see what I'm doing now. See, I don't want to cram too much. What? This numerator, you know what? I carry the denominator. Put it as numerator. Are you seeing me? What is it? So that I put on top. Formula, and I'm trying to let you remember that if I know this, so for me to find DFL, I don't carry the denominator. Put it as what? Numerator. All over this same thing I wrote on top, minus R minus TB over 1 minus T. That's all. For DFL. Yes. So if I have known this, I just move this. Put that for off. Repeat the same thing. Just remove this two. That's all. So that you don't waste your time thinking of the formula. Just understand one thing. And just get the other. So this is a 200,000. Have it? Good. 300 minus 190 minus 280,000. All over 200, 200,000, 300, 190, 280,000, 60,000, minus, is it 60? And I read this now. This is not R.
You can't have current interest charges of 60,000 naira. 30,000 is
I mean, I don't see it again. Oh. But I open the eyes. So they can see. And they come now, and they come. I'm coming. Let me write this in place. The spirit says I should write it. 4.3 is 30%, Abby? Yes. Oh, yeah, let's go back to the question. As they are not seeing what I'm saying. Let's check. The question says, the firm has current interest charges of 60,000 on its long-term debt. Long-term debt is dimensional. That's current debt, long-term debt, which is also known as non-current liabilities in account, or long-term liabilities. Is it okay now? And then the preference share dividend, it has been paid already. It's 20,000 naira for the current year. Tax is paid at the rate of 30% per annum. Is it settled? We're all doing well. Okay. I believe the calculator will do the job. Already, we have numerator that is very clear. 21720. That one is there, I mean. Over 21720 minus 60. Oh, okay, let's take it.
in the example, can I just mix? I'll just go and mix 21720.
It's the same thing. Not that I lifted it. I did not lift anything. I only saw this. This is already calculated. Same thing here. It's same thing here. This every day. So why would I press my calculator again? There's our sharp, you move on. But if you still like calculating, there's nothing wrong. Maybe your first calculation was wrong. I want to cross check. Please point the calculator all over and see whether it's the same thing. Is that okay? So this one will be minus 60,000. Somebody help me divide this. 20,000 over 0.7. You said? 33. 28. 5. Like this. Okay. Oh yeah, now somebody help us again. 2172000. Divide it. So this minus, what do you have? Somebody say minus. How come? Please, 21 million. No? 21 million minus 60,000 minus 28,571. How far? The accurate value. 21. 31. Or 42 like this. Somebody divide and say what?
You know, the first formula, QS minus D, at the end, we got the 22 million for the numerator.
Yes.
But this one has minus FC.
That FC is that denominator.
It's like, but
wait. It is this denominator that became numerator.
Yes.
Abi? Yeah. It is this numerator that we put here now, which was denominator formerly, Abi? Or in a simple language, this times this minus this will give us this. Is it clear? This. The meaning is 110. 110 times this minus 28 is this.
Okay.
Take it gradually. You can press calculator this times.
No, you are used to me. I'm following.
I'm telling you now, follow it like this. This times this minus this. You get this? That's all. Any other question? Somebody press calculator for us. 1 point.
1.004.
004. Like this,
004. Yes.
About okay. 1, Abi. 1. So 1 time. Okay. The next thing is the combine, Abi. Okay. Let's interpret this one. Okay, please. They are the accounts guys here. So, continue. Story. 30 minutes. Story. 30 minutes. Clinic is clinic. The tell you say I know very well I'm almost. Well, not 3 minutes after. Question, Sha. Hey.
He says,
And I want to
significance.
Yes, no, not every time he says so. This one will be sales. This one will not be. This one, I mean, it will not be assuming 100% increase in profit. Because this is profit on top, I mean. Up is profit. And here was sales contribution. I got it. Good. So here will be assuming. Oh, well, one time. Assuming 100% increase in earnings before interest and what? Tax, which is profit. I mean, assuming 100% increase in earnings before interest and tax, there will be 100%. Because this 100 times 1 is 300, I mean. Assuming it's 1.07, it will have been 107%. So there will be 100% increase in EPS. What is EPS?
Earnings per share.
Earnings per share. Earnings per share. Earnings per share. EPS. Earnings per share. I have to calculate earnings per share. Earnings per share is the earnings before interest and tax all over the total number of shares. Or even if after. Whether it is earning before interest and tax or earning after tax and what have you, all over number. Because in most cases of companies may not have tax at that particular time. I follow it. They may not have interest at that particular time. But whether it is earnings before interest and tax or earnings after what tax, all over number of what? Let me put it here. Is equal to earnings before interest and tax or earnings after tax all over number of what? Or total numbers of what? So that means there's always earnings per share. Is whether it's ordinary shares or preference shares, you calculate them earnings before interest. So take note that POL talks about increase in sales. That will lead to increase in what? YTFL talks about increase in profits. That will lead to increase in earnings per what? You must write the right language for you to get more mark as for the interpretation. Yes, degree of financial leverage for you to interpret the significance. It is when you assume 100% increase in earnings before interest and tax, there will be a 100% increase. What I did was to use this 100 to multiply 1, no, as mean it's 1.07, it will be 107%. So that somebody will not think 100. I say they did know what is here was multiplied by 100, and it happens to be 1, which has the effect 100. So it would have been 102%. If it is 110, it would have been 110%. 1.1, 110%. So that is how it is. Any queries? Good. The last one. That if I go take the question, one question, I go send it to the platform, and I go tell you what will happen. We may not go too much subtly. Just tell you what to do. We just put it on the board. Everybody understands. You understand. I don't want to interpret that contribution magic, so that in case you see that kind of thing, it won't be as if it's magic. So here is Roman figure 3. Combine what? Leverage. This one, there's nothing in it. TOL times TF what? L. TOL is 1.07 or 3. 3. 1 Abi. And this is 1.00 Abi. Now answer is 1.01. So this one has gone. The interpretation here shows that the organization is risky. This one is risky. Because it would have been better interpreted if there are more than one company. Remember, if there are 2 companies, the interpretation will know the one that is higher. So, but because it's only one, the story may not be much. But from our idea of degree of financial leverage, break-even point, we can say that it's what risky. But it's better done when there are 2 or more firms, like you saw in that one. But if it's just one, if it were less than 1, it would have been fair. We can invest. But this one is small. It's small. Always 1 point something, but it's way. But this is 1 point. But assuming we have 2 or more companies, to be better interpreted. If it is 1, it's still fair. But it's moving. It's moving more than 1. But like I said, if there are 2 or more companies, that's where the interpretation better.
If it was
Or
below 1, it would be better to invest.
I know if it is less, it's less risk.
Less
Yes, less risk. But this one is still risk, but it's more than one. This is more than one. But if it's one, it's well. But like I said, the interpretation is better. One or two companies to form 0 point. Okay. That one has gone. So before we go, few minutes before we go, let's see what I can do with this question. I'm going to send it to the group and then just interpret it. Yes. It's the same thing. We are not solving anything. It's just to bring out the point there so that somebody will understand in case that kind of question is found. Yes. He said, we are done. Abi? We are done with the question. I don't want to bring out this so that. So I'll put another one. Another question. Now, in that question, there are two firms. Firm R. Are you there? Okay. Those of us online, I hope you are there. Firm P has contribution margin. Are you seeing it? Contribution margin. So, in that one, what I'm after here in this third question, DOL is Q into X minus B all over Q, S minus B, where S minus B equal to contribution what? I hope you understand what I'm doing here. Is it clear? Based on that question, contribution margin in that question is what? S minus V. And this question is 1.5. That means if I'm to solve this question, the first one, 500 units, Abi. Hello? 500 units now. Are they not seeing it? 500 what? 500,000 units. 1.150. All over 500,000 units. 1.150. What's that fixed cost there? 9,000. Check now. Firm B.
Please, which question are we treating, sir?
This is what I'm saying. Have you seen what I'm saying now? According to the question, firm P has a contribution margin of 150 kobo per unit. That bracket, S minus V, will not be 1.5. Our fixed cost will be 30,000. That's what I want to bring out. That's all. I understand. And where? I never do anything where. I said our degree of operating leverage. See formula now. Abi? S minus B, which is this, is contribution margin per what? In that question, contribution margin per unit is 1 hour. Yeah. That's what I want to bring up. We all know the rest, Abi. It's just to tell you that S minus B is our contribution. The same thing happened to the every other thing remain constant. It's just that contribution margin I want to bring out. Because in exam now, you say, I've said, you can finish up. Yes. That means that S minus B will be replaced with 190 kobo. Because that's the meaning of contribution margin. See now, where S minus B is what? And S minus B is what?
S minus B is selling price.
No, selling price and variable cost is the same thing as contribution margin per unit, which was given 190 to cover the question. Can you see the question? Yeah, never see. Yeah. If you can concentrate and look at the question. Pen B has contribution margin of 1.50 naira per unit. Have you seen it? Okay. And now then our contribution margin per unit is what? So whatever I think is what will I put? Is that one difficult again?
Okay, they already gave us
They have given you everything. That's what I want to interpret. In case exam, you see contribution margin per unit, because I might not show that. That's why I brought that. That's all.
So when we have S minus B, I'll just put 1.
That based on what the contribution margin per unit. That's all. Is it clear now? Another question. The same thing happened in prime R. Contribution margin for prime R is 7.5 couple. So the same thing. Another question?
I think there's a question.
Yes, sir, there's a question.
This is financial level.
Hello, sir.
Hello, can I go ahead?
Okay, sir. Okay,
From
this question now. Okay, from this question, what would be the DP? From the question you just sent to the group chat, what would be our DP?
Our
from this question, DP. Yes,
Okay.
DP.
Was DP given? No. In this question, there was no dividend. So you don't need to create what was not given. There's no dividend, no preference dividend. It's only rate. I will stop at R. Our formula will stop at R, no dividend. Is it clear?
So our DFL. We stop at R.
Tax. If tax was given, you just multiply now. You don't say there is rate. Rate. You open bracket, 1 minus R. That's it. Okay. Oh. Don't worry now. The back can clean this, Abby. Is it clear? Is it clear now? Tax now. Tax must be affected. If you don't know what it tax, if you tax will be affected, Abby. Something will go away. And that. That's what you do. Yeah? Yes, that's tax. You know this is where the vote is stop. So tax will be involved. Let's do it this way so that I can understand. See my hand. You know this profit, Abby? Abby, this profit. Wait, this profit. Before tax, Abby. This profit before tax. There's interest already, Abby. This is interest, Abby. So this is profit before what? They will not remove tax. Are you following? This is how you do it. See my bracket to all. This is our profit. And you put tax. So that's how you do it. If there is no dividend.